hitting it hard on the weekends to get ready to lose money on Tuesday. That's so funny. So I'm assuming you're skipping Mondays, huh? That's a good strat. Hi guys, welcome, welcome, welcome. How is everybody? I'm gonna start with the Forex Factory real quick first because I want to know what's ahead of us. So I'm gonna take this here. Let's see what's going on. Oh, where did Discord go? All right. So Monday, no news. Tuesday, no news. Wednesday, there's FMC meetings. The FMC minutes though. Thursday, unemployment claims, 8:30 red folder, 9:45 red folder. Thursday should be eventful this week. And Friday we have 10 o'clock red folder news. It's pretty light week, but it seems like we might get some action after Wednesday, meaning potentially it could be a Wednesday low of the week, high of the week, depends on how we trade, what price does intraday. So this, that being said, I think Monday should be avoided this week, um, because there's no news. Market just hit all-time highs. You know, we might not get a good price action. It could be just, there'll be scalping opportunities for sure, but I think it's going to be a slow market, especially on Monday. So we'll see. On Tuesday, same deal. It could be a slow market, and by skipping the first 2 days of the week, it could actually provide a lot more information about the week itself, considering the weekly profile. You can anticipate whether it's a classic ICT weekly profile, week Wednesday high of the week, low of the week, or the consolidation profiles, etc. So the safe thing to do, obviously, I'll be there on the live stream on Tuesday. Not sure if I'll put a trade or whatever, but on Monday, definitely it's not worth watching the market. So get your sleep in, get decharged for the rest of the week, I would say. That's probably what I'm gonna do. Let's get back to the charts. So, Nvidia earnings on Wednesday, that's a great point, actually. That's a great point. I should look at AMD for potential calls. I think it's gonna be around. I'll take a look at Nvidia chart after indices. So, this was mentioned on, I think, on Thursday, the range from CPI low all the way to the high, which is above all-time highs. This is the dealing range on the hourly chart that I will be mainly operating in this week. So we have the high from Thursday, which is range high or buy side liquidity, and we have the S&T lows below CPI lows, which is the sell side liquidity. I think the market will want to, I mean, it is going to rate one side or the other, but for that, obviously, it's going to form a sell model. Right now, by the look of the range equilibrium rejection from Friday, it seems like this wants to sweep buy side one more time. Maybe like, let me pull up ES. Maybe like form an S&T divergence at the high to go below the CPI low could be possible, because a rejection just like this one here tells me that the market initiated a sell model initially, right? This is the first stage, sold off, and rejection from the range EQ, which indicates what? It indicates the whole market maker sell model is what? Pullback, right? Instead of a reversal. So for this to become reversal now, I think it needs to run the high one more time, either on ES or NASDAQ or both. So with that being said, what I'll be looking for primarily this week will be long opportunities intraday. Obviously, it depends on the overnight price action as well. I'm not saying like I'm going to be sticking to longs the whole week, but uh, like majority of my positions will probably be long buys. This is a big reaction. So that being said, let's go down to the lower time frame. I'm not gonna mention the 15-minute because the real event actually happened on the 5 minute rather. So I'm gonna go down to 5. And here, what we have is, let me just annotate this as buy side real quick. What we have here is at range equilibrium. As you can see, price initially consolidated, right? So it failed to make a new low, it failed to make a high, etc. So it stalled here a little bit, right below a BC, which is what? It is a smart money reversal, right? Once the inversion fair value gap is rejected, rather violated, with this candle right here closed above it at 250. Now you have a confirmed smart money reversal in the form of a trap. So that being said, on the 5 minute, I think we could potentially see one more manipulation down into that BPR or like inversion fair value, whatever you call it, which is also a discount PDRA in this range, and then form a buy model and rally. I think that would be very healthy. And I think everyone will think about that manipulation and see an opportunity to go short. But I don't think that will be the case. Look, by just looking at the range equilibrium reaction. So that's that. I think this will be a very, very high probability point of interest in my opinion. Here, I'll annotate this as trap. And if you wanna, if it offers, obviously, if it offers a long entry from this PD array, obviously we'll be looking at the low-hanging fruit objective is right there, which is the buy side, right? So you gotta be looking at this dealing range as your short-term dealing range, and you would like to be, or I would like to be go long here and take the low-hanging fruit objective, which is a very good reward. 93 points is very massive, but we'll see. Right now, it had a gap. It gapped up a little bit. Um, this might as well reach to the low-hanging fruit objective overnight. I don't know that, but we'll see. If it doesn't do that, going into New York session, we could definitely expect the Judas swing here at maybe 9:30 or something, but we'll see. I don't like to long in premium, as you guys know, so if it opens here and doesn't offer a Judas swing whatsoever into discount, I wouldn't touch it personally. Um, contract expiration, I think that'll be, shit, I forgot. That'll be in June here. When is it? Second week of the June. So we have time for that fuckery. That's my least favorite week, by the way. Hands down, my least favorite. So let me take a couple. Oh, actually, it's fine. Let's start with 5 minutes. I wish I didn't delete that. 5 minute. I swear, guys, I'll be as fast as I can. Cool. Now that I'm on the 1 hour again, I want to also mention one more thing. This is also, if you look at this PD array, which is the fair value gap that caused a trap or confirmed a trap. If you take a look at the CE of this huge wick, you'll see the 0.5% of that wick is kind of aligning with that PD array. So this makes me think, like, although we have a rejection block here, but we'll see. We'll see. If it doesn't come down first before taking out the low-hanging fruit objective buy side here, obviously I'm gonna disregard this PD array. So on the hourly, another thing to mention, for me to go short or think like short-term bearish in NASDAQ, I think CPI lows will get targeted. Either way, it's going to be swept one way or another. But I think I mentioned this before on Thursday, but if you missed, if I ever want to target the CPI lows, instead of going long, going short here right now, I would wait for price breaking below with energy, breaking below into discount, forming maybe a PDRA or a fair value gap at range equilibrium or slightly above, retest, and that'll be my highest probability short. Then and only then I would look for short entries. And I think like if this goes for the sell side below CPI lows, which I really believe it will at the end of, like eventually, it's going to be a low resistance run. So I really want to be a part of that that kind of move. Also, I think this fair value gap below the CPI low will be a local bottom, I believe. And that is mainly because if I go on the daily chart here, you'll see we have a couple PD arrays here. We have accumulation fair value gap, right? The upper fair value gap is the accumulation, and then we have another fair value gap on the lower end, which is IFED. So that being said, I think CPI low raid will be a turtle. So probably like CE of the fair value gap right below CPI lows will be very sensitive once it gets there. I think it's going to be a rejection there for a long time, and it's going to hold that low for a long time, I believe. But we'll see. That's kind of like a midterm projection or midterm thoughts. This is pretty clean so far though. Like I didn't trade Friday. I didn't watch the price action that much, but I had an alert here at range EQ. So once it got triggered, I was watching the price, and it literally did what we were expecting. So that's something worthwhile. Overall, I'm looking at the buy side. So that's simply put. Let's look at ES real quick. ES is the same deal. Same range equilibrium, same fair value gap, same buy side, same rejection at range EQ. So whatever I just said on NASDAQ applies to ES. I believe by the look of it right now, the Sunday market opened gap up and it's trying to reach the buy side already. And ES doesn't have a low hanging fruit objective just like NASDAQ. I think this is just gonna rate the buy side right away. The only thing I don't know is whether it'll be overnight or whether it's gonna wait for New York session. I guess we're gonna wait and see that. But yes, is definitely stronger compared to Nasdaq. And any type of like SMT divergence at the highs or whatever here, I think that'll be the major cause for market to start pulling back into CPI lows. So it'll be healthier to go short afterwards. So in media earnings, I read that. Are you putting a stop at the pivot or a few bucks under the fair value gap on long wicks like that? Here, let me take a look at it. So I assume you're talking about here. If let's say price came down into that fair value gap, if I long this targeting like this high or whatever, where would I put my stop loss here? That's your question, if I'm not mistaken, correct? For you. If so, here's what I would do. First of all, I would never execute on 5-minute time frame, so I'll jump into 1 minute and I'll look at the price action on the 1 minute. Jesus, I can't speak. 1 minute when price trades down into that PD array. So I'll start watching the 1 minute price action and I'll look at its own PD arrays and utilize those ones on the 1 minute for my stop loss, which means like it'll never be more than 20 points or 15 points though, like regardless. But say if you're trading Forex, if you're trading like, say like CFDs and stuff, and if you like to enter on 5-minute time frame, technically speaking, this is how you should do it. You long the fair value gap here. Your stop loss should be either below these bodies, or if it's not too large for your liking, this is the safest of all, below the wick low. For me though, this is very large. Obviously, like if you're trading futures, 48 points, hard to do. But if you're trading CFDs, because it's easier to manage sizing, you can do so. There's no need though, it shouldn't come down there anyways if it's bullish, because you have a breaker here on a lower time frame. Means what? The breaker shouldn't fail, right? So if you long here, that order that candle, specific candle, the up close one here, should be validated. So you can put your stop loss 1 2 ticks below it, right? That should be safe. You don't have to use the swing low. But anyways, that's that on indices. I think we're all on the same page. I feel like that's a massive reaction. Let me go to crude oil. I want to look at crude oil because I believe it's gonna be. What the fuck happened? Hold on, guys, 1 second. I think I fucked up my crude oil. I'm gonna go to the delivery contracts instead. So I don't know if I had the adjust on or off. Looks like it was off, I guess. Yeah. All right, whatever. Crude oil, June contracts. No, I already annotated this. Interesting. Okay, so crude oil looks interesting to me because it literally traded down, like pulled back into a very massive um, range EQ. This is a very long-term range, so I would say this is a mid-term range, and this is the daily chart, guys. There's a fair value gap there at range EQ. It's technically not a discount fair value gap, but a little bit of the lower portion is discount. So it traded down into there, started consolidating here. It never broke the range low, but never broke the range high, and it never actually violated the fair value gap itself. Meaning, this really makes me think like I think this is setting a trap shorts, like short trap here. And it looks very clean. Like the moment it inverts the fair value gap, the CB, I think this is be a second stage reaccumulation. It's gonna be very fast. I mean, I'm fairly bullish on crude oil this week. Um, I think it's gonna like either on Tuesday, Wednesday. I don't know. It's calendar just yet, but I think the highest probability to trade would be after the inversion, but there's nothing wrong with going before price inverts that daily fair value gap because I think it's pretty obvious. There are a couple of things like range EQ being respected, algorithmic delivery, discount fair value gap being respected, algorithmic delivery. There's rejection blocks being respected. Now there's an order block being respected. So you don't even technically wait for the inversion fair value gap to seek shorts intraday, in my opinion. And the target will be what? The target will be the original consolidation, which is the buy side. Good days ahead of crude oil and bad days for us. I guess we're gonna be paying $7 a gallon in California soon. A range EQ3 is the most recent sweep, both sides, or straight high to low. That really depends on the context. So let me go back to NQ. But before that, hold on 1 second. 1 second. I'll answer your question in a minute. Draw is here in my opinion. So let me take a screenshot of this. So for these, there are a couple different ranges. So we have range in a range and stuff like that. So for example, and that comes down into which time frame you're looking at, by the way. So on the for me, the hourly or 15-minute ranges are usually the intermediate dealing ranges, is what I call. When you go above 4 hour daily, weekly and stuff, that what I refer to those ranges is a long-term range, and anytime below 15 is a short-term range. Now, how you annotate range is you look at the high, right, before the market structure shift, because that sets the high. So now this high is quote unquote safe. Now you can assume this is a midterm range high, right? So you take the high, and then you look at where is the SMT divergence, the last SMT divergence that caused this whole rally, this whole leg, and then you see these lows here, which was I'll pull up ES for you so you can see it better on the hourly chart. So ES there made a lower low, Nasdaq made a higher low. So that SMT caused the very last leg up. So you take that low as your range low. If this was the other way around, let me flip my chart just to show you. It's the same deal. So you assume this is range low, then where's the last SMT that caused this whole bullish run, or bearish run in this case? It's up here, so that becomes your range. And this applies to lower time frames as well. So if I go on the 5 minute, how I do it is there's original consolidation here, right? Let me pull up ES real quick. It's the same thing really, like time frame doesn't matter that much. 5 minute. So here, I think there's SMT somewhere here, yeah. Which is also original consolidation, right? So what you do is you look at that SMT divergence, pull up your Fibonacci all the way down to the smart money reversal, which is trap, and you look at this dealing range. In this case, you can also look at all the way from here because it's very close proximity. But this is the highest probability to draw on liquidity on this specific time frame because the SMT divergence is up there, meaning the liquidity is far greater um, than other swing highs. I hope that makes sense. I hope I explained it pretty good. But if you have any questions about that, don't hesitate to ask, brother. I think dealing ranges are very important because it literally provides a lot of information, plus sniper entries, plus you can literally read the bias off of dealing ranges as well. Get an electric car, wait, it's 5 times per kilowatt in oh yeah. Unless you have I think if you have a charger or something at in your garage, you should be fine. Because my girlfriend has hybrid Audi and we charged hers once. It was very cheap, like $3, $4, 50, something like that. I don't remember the exact price, but so original consolidation had nothing to do with it. Not necessarily. So the original consolidation becomes, in this case, becomes where the SMT is, if that makes sense. So when you see the SMT, it is the smart money reversal, right? But at any time, if price starts reversing at the highs and starts a market maker sell model or whatever, that SMT divergence becomes the original consolidation instead of smart money reversal. So it's like you're basically like flipping the coins with the market by the market moves, essentially. If I lived in Alabama or some other place, I would be five. I know, right, bro? I would get a 6X Mercedes just for funsies, small dick stuff. So crude oil is that. I'll be looking at crude oil this week a lot more because, um, first of all, it's a great read, easy price action. It's just breaking out, so it should be really fast. The second reason being Nasdaq only have, or indices only have 2 days of red folder news. So what you can do is what I'm gonna do as well is basically like on no news days, if you really want to trade, look at crude oil, okay? Look at energy news calendar. If there's news, like let's say on Monday, if there's red folder news on energy sector, trade crude oil. Skip Nasdaq. Same deal on Tuesday. If there's no news on Tuesday in New York session with energy red folder news, you trade crude oil. Simple as that. You don't touch Nasdaq. You don't touch ES, basically. Cool. That being said, I'm gonna skip gold. I'm gonna look at DXY and Euro USD GU because they're also moving good. So let's start with DXY. TJ, pay attention here. I know you're a forex trader. So I actually changed this thought, but um, here, as you can see, DXY is stuck in between bearish and bullish PD arrays. And last week on Sunday, I was leaning towards bearish move, not because of DXY, but because of how Euro and GU was looking. Like if I was looking at DXY, it was let's see, Friday, Monday. It was like this last week on Sunday. It doesn't give much confluence in either side. It looks kind of 50-50, but because it's correlated with Euro and GU, I got my bias for DXY from those assets, and I'll show you in a second. So far, I think DXY wants to go for the lows for sure, and I think overall this wants to complete the whole sell model on the daily and gets down into 102.35 level, which is the smart money reversal or consolidation on the lower time frame though. So we have bearish DXY in my opinion. I think it looks good. It is in discount right now. We'll see how it goes, but I think it is at least wants to go for the short-term sell side. Not short-term, but intermediate-term sell side. And then there's BPR here. We'll see, but my idea is I think it wants to go below that potential drawn liquidity, 102. So I think this week's objective is the very close proximity low. This week's probability objective. I don't know if it's going to go further than that, but we'll see. So this week, I think DXY should be bearish and Euro USD should be bullish. And let's take a look at Euro and USD. Damn, that's so clean. So this is the same deal. So it came down. Like first of all, it failed at the highs here. Euro never break above the original consolidation, never complete the buy model, whereas GU did, which causes what? It causes SMT divergence. So it offered the sell side, rated the sell side. Once the rate was completed, now it started accumulating. It slowed down, and that slowdown happened right below a SIBI. That SIBI was inverted 2 weeks ago, and then we had another breakout, and that breakout was it formed an SMT divergence, a bullish SMT divergence. So going into last week, I was really bullish on Euro and GU, and I still am. So this week, I think the draw on liquidity should be the original consolidation, which was never tagged on Euro. So there's unfinished business up there. I think it'll want to, expand towards that level, and same deal on GU. If you're looking bearish moves this week in forex currencies, I would nominate you to reconsider your technical analysis, how you do technical analysis. But yeah, this is fairly good. You can literally see the sell side of the curve here, and then buy side of the curve. TJ, note these things. I know you're trading Euro a lot. So same deal on GU. And also GU actually completed the standard deviation projections as well. It tapped the -1, whereas Euro, I think I should look at, Euro didn't do it actually. The last leg was this one, so I gotta look at that one for the standard deviation. Oops, that should be reversed. I reversed this. -1 was tagged as well. The body is respecting. So that's that. Now, if you're a huge fan of standard deviations, because this is leaning bullish right now, you can look at the last leg here, and it's standard deviations as well. I don't do this like quite often, but it's definitely doable. And probably -3 will align with, or 2.5 will align with the buy side. There you go. I'm gonna keep that on the chart. That specific level. Same deal on GU, the last leg, -1.5 and -2 it seems. -2 and -1.5. Let's see. I would take -1.5. Because you don't know how it's gonna react at buy side. It could reject or not. You have to pay yourself. once it trades above or below an any kind of liquidity pool. So let's take a screenshot of this. On the lower time frame, I mean, you don't even need the lower time frame that much because there's a daily fair value gap, the daily BISI, which was IFBD. So this should really send the price higher. But if you really want me to go down, this could change intraday. So then don't take it word by word. There's a new dealing range on EU. You look at that dealing range and it's range equilibrium. There is a discount and it is a BPR. That to me is a high probability long. Before price comes down there, I wouldn't long this unless it makes a new high. So if it makes a new high, then you can seek short longs. But if you don't have to wait for range EQ. But if it doesn't do so, if it just like comes to a certain point and tries to rally, that rally usually is fake, and that rally usually don't touch the buy side. It's usually a fake out. So that's that. Cool. I always figured standard deviations are on the chart because it looks cool. Basically, a TB, if you don't know what draw, is there a value in it? For me, the values doesn't matter, honestly. For me, it's just like if any value, just like I was doing on here, if like -1, -2, or the 0.5s aligns with a potential drawn liquidity, that's the level I take. So I disregard -1 in this case. Or if I was looking at EU, let me just pull that up. So if I'm looking at EU, for example, and I'm seeing -2 is aligning with the liquidity pool I want to see price rating, I disregard -1, -1.5, -2. I'll just take -2.5. But regardless, like the only thing I'll do regardless is I would collapse my trade here. I wouldn't wait -2.5 because for me, the way I see that type of trading is just like greed, and I don't like being greedy. Yeah, I don't know how much this would worth in Forex. I think it depends on the lot size, but if it was NQ and if it was like 5 points, I wouldn't even care if it flies 100 points after I collapse my winning trade. So yeah, I hope I'll see more charts from you, Faris. Very excited for your a new personal account. I don't know if it's new. I said new, but so Nvidia. Okay, let's not forget Nvidia. Wow, Nvidia is still very strong. Damn. Go to so the earnings is on Wednesday. I need to turn on these. Hold on. I gotta turn on the after hours, pre-market, after hours. Is it on? Why is it? Okay, it's on. Wow, this has potential actually. So this is the OB, range EQ. This has potential to make more runs actually. I see this as a trap. The fair value gap was inverted, retested, range EQ, rallied. So I think this is definitely one to go for the buy side. So if you want to gamble on stock options before ER, I don't recommend it, but I think NVIDIA calls would be appropriate. And for the standard deviation, I would look at the last manipulation and its projections, and these would give me the overextended price targets. Let me see on the lower time frame. This looks better, I think. Oh wow, a lot of T-wapping here. T-wap. Just want to see a clean trap or something here. Yeah. So price accumulation. Inversion of this fair value gap confirms the smart money reversal. Retests. Like all those retests and touches into the IFVG above the accumulation. I mean, this is the important part. There has to be an accumulation. If there's no accumulation, that's not valid. So any touch or retest of this fair value gap is a long. Nice. You can see how it's holding. But yeah, I think this looks good for more buy side. The overextended target is they need to split this stock. This is insane. Like $1,000 per share. They need like 1 to 8 or something. So the level is 1058 for the extended target. I'm gonna look at a couple more stocks since I'm already here. Not Tesla. Fuck you, Tesla. Okay, not Tesla. Tesla is getting ready, but not ready just yet. So I'm just gonna skip Tesla for now. SQ. SQ is not ready as well. PayPal. I'm still waiting for this fair value gaps CE being broken for PayPal. Unless it does so, I am not willing to touch it. There's no confirmation yet. ACMR is going down, down. AMD, okay, this is the one that I'm in that has my interest. Because if Nvidia makes a run, that means AMD is gonna make a run. Because they're in alignment, same chip stocks. So dealing range EQ was tested. Now it's accumulating at that level within the, what is it called? Like the discount arrays here. In fact, like there's volume imbalances being respected. That's algorithmic. So here, the discount fair value gap. There's a little fair value gap here, which was inverted also. That's big, in my opinion. Inversion of that fair value gap. So if it retests, actually, I'm going to set an alert there. If it retests that fair value gap, I think that would be a great buy to target the buy side. And this is the low hanging fruit objective, which confirms the shift and the order block. Damn. Let's see the reward here. So instead of Nvidia, I would definitely. This is what I usually do with stock options, because the premiums on Nvidia is so expensive, and it has always been. I used to rather trade AMD, which is what I did last year as well. So the reward from that fair value gap to low hanging fruit is 15%, and the all the way high is 40%. Pretty good, I would say. So the alert is set. We'll see what happens. People always try to get bullish on PayPal. That stock is a piece. I agree with you, by the way. The company is fucking like useless and whatever, but I think like in terms of price action, in terms of like technical analysis, it has potential to yield good earnings, good return. Because like if it wants to make a rally, if it's gonna make a rally, it's gonna go for here, which is 120. And if you look at the reward, let's say from the CE, you long the CE, 80% return. It's a big return. That's why I'm interested in PayPal. Other than that, like if the company itself is, are you kidding me? I was saying last year like I think they're gonna go bankrupt, and I got a fucking line of credit from PayPal thinking they're gonna file for a Chapter 11, which they never did, unfortunately. That was just like stupid of me though. How many false breaks so far? People have been losing money forever. I mean, they're impatient though. That's the problem. Like in this price action, there's literally none, zero long entries or long signals, or to go to be bullish rather even. So for me, the only thing that's worthwhile is this level manipulation. If it's at least like break the CE of the last manipulation, we might have something. That's my only thing. If it doesn't do so, yeah, I wouldn't even look at PayPal. I'll probably delist PayPal from my watch list. That going nowhere. Oh, that's so stupid of me. I'm telling you, dude. I didn't know who was their credit provider. Uh, it's just like it's just funny. I just paid my, so I wanted to put debt on it. I was literally thinking it's gonna go bankrupt. That was the thought process, no joke. So I was like, you know what? I'm gonna get this. Let's see how much credit, how much line they're gonna give me. So they accepted whatever. The line was fair. I was like, okay, I'm gonna take it. And I'm gonna put it. I'm gonna max it out. So I got the car, and then the day after, I literally paid my car insurance off with that credit card, like for the whole year. And I'm like, you know what, guys? Screw the insurance company, screw the fucking credit card provider, screw PayPal. I'm gonna fuck them all, you know? Never happens. It's just so funny. It's a funny story, I think. But yeah, that's that. So for reasons because you're here, let's take a look at Wolfgang, or whatever the stock is, Wolf Speed. That's how they. Honestly, bro, I really don't know how credit card system is in Turkey. I don't know how it works. I've never had a loan, never had a credit card. And in fact, I learned that this year that Turkey also has like credit score, just like the States, and I didn't know that. To cut your hands off if you don't pay. I don't think so. Uh, that's funny. They do it in here though. They send you a collection and that fucking lawsuit takes what, forever. Alright. Wolf Speed still looks interesting, but it's still not much action. I want to see displacement, and there is. Oh, earning in August though. I think this mentioning this would be fair. So if it inverts the volume imbalance because there's an accumulation below it, it could lead into a massive rally. Until then, though, it could consolidate for decades. Let's set an alert here, actually. I'm gonna skip to jump to crypto real quick because there it's been also clean. I have an open position still on crypto. All right, crypto, crypto, cool. That's pretty spot on, honestly. Like dealing range, last SMT here, discount fair value gap, range EQ, wicked into there, rejected right away the same day, and it formed a rejection block here. So after it's tried to came down there, and in that price action, if I go on the 1 hour, I believe it was 1 hour, no, 4 hour, it's set trap accumulation below CB inversion here, and that's basically a breakout. So now that means is the low that caused the trap should be safe. Same deal here, accumulation below CB, breakout, retest. So 1, 2, 3 candle was the long opportunity that rallied afterwards. And this second trap happens also at the range EQ, the last range EQ. So it's pretty algorithmic, I would say. And because of all that, I still have a position like I was long here in my fucking stupid trading view paper account, but competition account. So I'm definitely looking at the external high here on Bitcoin. I think that's the highest probability target here. But the thing is, ETH is kind of being a bitch here. It's lagging, and it might cause an SMT divergence at the highs. So be mindful of that if you're trading crypto. And Solana, I'm gonna look at Solana as well because I have position in Solana too. It's also the same deal as Bitcoin. We came down into range EQ discount, so there's discount fair value gap here and discount order block. Kind of manipulated first, but now yesterday it actually inverted the CB. Now the reversal is confirmed. This is a reversal on the weekly, I believe. Yeah, it's gonna be on the weekly. So I think what we're looking at is like definitely external high, but for overextended targets, I think we could see. Let's see. Oh, that's interesting. -1 is that rejection block. Let me take this. So that's this I would consider in this case because it's at a very specific PD array there. So I'm saying like maybe can't break out of this range, but instead it makes a fake rally all the way up to -1 or the rejection block here and comes down further. But let's see. So far it's bullish. I'm saying like it should at least go for 200. I don't remember the day it was 8 bucks. That was sad. I think that was related with the management team of Solana or something. Something was going on in the inside. I don't remember exactly what, but I think they resigned or something like that. That was a big manipulation apparently. Um, Still like 3 minutes. Yeah, that value is holding down price. The swing after the original consolidation to make a higher high. What made you bullish? So hold on. The last question is it for Bitcoin or what is it for? I missed. I read it late actually. Bitcoin. Okay, so here question. Let me read it again. The swing after the original consolidation, did it make a higher high? What made you bullish? Oh, here I see what you're saying. So wait, hold on. You talk about this high or which high are you talking about? Here? Okay, so this is what made me. First of all, the initial reaction. That tells a lot. It's rejecting range EQ, forming a rejection block, so those lows are safe. That's the first thing. Secondly, on the 4 hourly, with this high, which is the high you mentioned, that becomes the new intermediate term range high. So you have this high, you have a trap, which is smart money reversal. So you have this low, which becomes what? This is your new dealing range, right? So because you're bullish, because this trap should not be violated, the anticipation is okay. You have the range EQ, you have a breaker block at range EQ in discount, you have the fair value gaps lower portion is in discount, so you expect those levels to hold price, which is what it actually did also. Here, I'm going to annotate only the lower portion of it, the discount portion. So the moment it starts accumulating, this is basically like smart money is accumulating long positions in this case. And if you want further confirmation, trap. So for me, on the daily chart, the failure here doesn't mean anything at all. It's just meaningless, honestly. So it failed, yeah. Is it turtle soup? No, because on the macro time frame or on the macro level, it's actually going. So it's causing manipulations. There is probably SMT divergence there, which caused this whole pullback. You can anticipate that like that. So here, let me pull up ETH. What time frame is it? 4 hour. 4 hour ETH here. There's no. Oh yeah, there's SMT here. So ES is making higher high, not ES. Bitcoin is making a higher high. Ethereum is made lower high, which causes what? It's going to be either pullback, right? It's 50-50, either pullback or a reversal. So what you can do is, if you don't know how to, or if you don't have a bias, let's say on the higher time frame, if you're not bullish, not bearish, you don't know what's going on, you can anticipate this. You pull the range EQ, you know the S&P divergence would cause a like initial sell-off. Then you look at how range EQ and discount PDRAs react, or price reacts to those levels. If it's reacting, if it's respecting the discount PDRAs, then you can have a bias. Now you have a bias. You can anticipate, oh, this S&T caused a pullback. Once the pullback is over, this is going to make a rally. So I want to be a buyer, quote unquote, if that makes sense. Because you see, like, it never, um, it couldn't displace below range EQ. Rather, it just, yeah, traded below range EQ here, but it immediately after it was accumulation. So in that accumulation, there's also SMT divergence, which is indicating what? It is indicating the consolidation or the accumulation is about to be over. So once the Ethereum goes below, trades the sell side, you can turtle soup Ethereum, or you can just buy Bitcoin. Either or is, that's up to you. And you're buying in a discount. Market rebounds and it showed its intention. You can think of it like that, yes. So like I said, in this leg or in this pullback, if you don't know the draw on liquidity, you can say, okay, if this respects the range equilibrium, the range from here to down here, if this respects the range EQ, that means the market is showing its hand. So, and it wants to make another run. And then, or you say, okay, if the range EQ is broke, like if price breaks down with displacement and forms, I don't know, whatever, fair value gap or whatever at that level, then you can say, okay, this is market showing me its hand. I would rather be bearish in this case because it's drawn into this level or that level, sell side, whatever the case is. So when you're unsure, you can literally use the range EQ to read the bias, whether that'll be higher time frame bias, lower time frame bias, or a midterm time frame bias. Doesn't really matter. Hope that answers the question. I don't know. Let's see where my long is. I have a long in this fucking Leap account. Oh, I'm in fucking. So here you can see on Ethereum, I actually longed that turtle soup, the SMT divergence, and on Bitcoin, it was immediate. Like I got an alert here. I had an alert here. Once the alert was triggered, once I saw it, I just longed it. But this is the competition account, so it doesn't mean much. It's just for funsies. So for these also the rejection blocks, they tell a lot actually. If it happens, so the rejection block means, hold on, let me just close this. So if the rejection block happens after a specific level, after something gets rated specifically, in this case, it traded into range EQ and discount PDRA, right? And immediately after, like the day after, you can see the bodies, they're the same level, which is what? Which is rejection block. Now you can say with this candle close, the low here is safe. The rejection block is going to secure that low, and that rejection block happens for a reason at that specific level. So here, for example, it formed a rejection block, yes. It respected that rejection block, yes, but it also took the sell side. Let's say it didn't take the sell side. It is still in discount and a premium rather. So I always say this: if market tries to rally from premium, it's almost always is a fake out. It looks like it's gonna make a run, which induces people. Um, it used to induce me too, but it's rarely the case. Like we can see this here too. So like the safest thing to do is just to wait for either premium or discount depending on the directional bias. But yeah. Yeah, guys, so far that's it for today.